Hello guys, good morning. I'm gonna do the market update. This market update is gonna start with Bitcoin on the 4-hour and daily. I'm gonna talk about the hash ribbons, leverage squeeze signal that we got yesterday, and then I'm gonna cover slightly the general markets because yesterday we have a decent retracement on general markets, and I believe that is responsible for this recent swing low. So let's have a look at the 4-hour, starting in here with the RSI, and you can see that on this trend line that has held us just literally once in here after we came back down on the dump from the Trump pump, and now at the moment is breaking down from the level of 47. So we are now at 45 and something. So that's a 2-point breakdown on the RSI. That's slightly lower than I would like it to be because that increases the chances of reducing the momentum. But I think that is because of what the general markets did. And in my opinion, with what happened yesterday to general markets, I would have expected even a deeper correction. So even though this is a breakdown, it could have been worse. That's what I'm trying to say. And as you can see, we went to the white trend line. I introduced this white trend line on the price during the stream yesterday with Keith, and I say that the first line of defense that I talk about in the morning yesterday was 90.500. That would have been incredibly bullish if we held that level, but as you can see in the morning, as soon as the video went live, we started testing that, and around 9 a.m. It was being tested, at 1 p.m. again, and around 3 p.m. we broke down and we turned it into resistance. We went into this moving average, which is actually not a moving average. That's a representation of the support 47 from RSI, which I say it was going to be the second line of defense. At the moment I was recording the video, it was roughly located at 87.2, and you can see that we went slightly, we closed slightly below it. We pierced it by a lot because we went to the white line. And I remember during the live stream I say that even if we go to this level, it could be still fine for today to do another leg up. And that's just because many traders are probably looking at this ascending trend line and thinking, okay, that's the last line in the sand. But if we were to close with the body of the candle around 85, that will have been a deeper breakdown on the RSI, and I would have liked it less. So far now we are holding both the ascending trend line, the white line, and the orange. The orange is the one that we use as a breakout, as a neckline from the inverse head and shoulders recently for the Trump pump. So now we are using it as support, which is something mildly positive. Let's go with the daily, because I think there is where I'm seeing the most important, the white and black situation at the moment, whether we are bullish or not. We can see that in this trend line, the yellow line, we are still below it. Yesterday, I perfectly called what was going to be the resistance. That was the RSI 50, if you watch my video from yesterday morning. And we tried to break above it. We tried to go beyond RSI 50, and we couldn't. I'm going to show you that it's a lot clearer when we look at the price action. RSI 50 yesterday was this line at 92,500, and price went green into that. It hit it and it got rejected. Yesterday we managed to close beyond this blue line, which is the bottom of the trading range on the daily using volume profile. And I'm saying that that is also positive to hold that level on a daily basis. Remember that with the Trump pump, we entered, we got rejected, and we came back below. So this closing at yesterday at around 89.8 was again a decent resilience if you consider what happened to the general markets. And general markets didn't correct that much, but they broke critical structure. We're going to cover that just in a second, because even if you're not trading general markets and you only care about your precious alts bleeding or Bitcoin or whatever, general markets are going to have a strong say and are going to define what matters at the moment. You can see that today's candle has gone all the way down to 84,600, but now there is a battle to hold this formation in here. This is a new symmetrical triangle, and I'm starting to hate these symmetrical triangles. You know why? Because in all the periods, the previous period in this previous symmetrical triangle, the symmetrical triangle was symmetrical, breaks out, and then is a fake out. Another breakout, another fake out. It's because the trading range starts expanding and trapping breakout traders. So be careful with that, because that could be also the case around here. So if an influencer tells you, oh, we are breaking down in an intra-candle outside the symmetrical triangle, it is most likely a trap. And even on a closing basis, you can see a candle outside this symmetrical triangle, and then after a few hours, it starts going in the opposite direction. So the only reason I'm watching out the symmetrical triangle is because it's being used to trap other people. Therefore, I have to rely on other means to define what's going on. In this case, I already told you, breaking above this yellow trend line is a much more reliable source of breakout information. Today we are at 43, and let's say we went up and we met with the trend line, it's still 50. Okay, if we do it a few days after, it could be 43, 47, whatever. But today, if we go straight up, we meet with it at around 50, 51, if you want to be safer. Yes, I wanted to cover the MACD. MACD, let's see, yesterday confirmed a bullish cross at around 3,000, which, as I say, is a lot better than producing a bullish cross at around minus 900, which is what we did on Wednesday 19 in February. Obviously, doing bullish crosses, the lower you do it, the larger it has been the reset, and therefore there should be a little bit more upside. The opposite goes if you get a bearish cross very high, then you need to reset all the way down. So keep that in mind. No signal by itself works. You need to do pile up a little bit more of information. So let's go with leverage squeeze, and I'm going to show you the signals that we got yesterday. Remember that you can get these indicators with my subscription. I always show them anyways, but if you want to automate them or do anything with them different, check the parameters or whatever, you can get the VIP subscription and you get this. You can see in here, it has produced decent signals. This one was over 20%, and now I suspect this is getting into the 5%. This was 9% to the downside. They don't always get it right. Sometimes it's a bit too early. I have shown the full performance in past videos. Let's go to the hash ribbons, and let me give you some news, because yesterday we were about to produce another capitulation signal. We got so close in here with this approach, closing the mouth, to produce another capitulation signal. That will have mean that we are having to extend a lot longer the buy signal coming from this indicator that tells us that we are still in an area where miners are struggling to produce enough hash rate. But today, interestingly, we are having this spike. So you can see that the lower highs are coming down on the hash rate, and today we're having a big spike. So I already see there some sort of new breakout, more intense than the one that I called out last week. And this guys, if the price starts coming up, could be the beginning of a buy signal. As you can see in here on the daily time frame, the wicks to the downside are pushing the price up, but the Trump pump is also in the triangle, in the symmetrical triangle, pushing the price down. So we have a squeeze today, we have an event, we have economical events, and those are going to contribute to volatility to get us out of the symmetrical triangle. Just be careful. It can very high likely that the first move could be fake. So we're going to have to look into more data to really understand. In general markets, if they're bleeding, it is high likely that they drag Bitcoin in the same direction. If they recover, the same. So watch out for that. It matters a lot more than just a stupid triangle with a price exiting from one end. Don't get trapped with just that silly signal. It traps a heck of a lot of traders. Let me go into, let's go into liquidation levels and let's identify where they are. 92,900 now, thanks to the move to 92,500. It left quite a big chunk of liquidity there. Then if we go here to the bottom end, we have the 81 and we have the usual suspects at 78, and then a little bit lower, let's see that it's 75.4. Okay, so we have pretty a good accumulation of big levels of liquidation below that we already covered in previous videos, and we also have the 100K, and this is pretty annoying to scroll on the phone for some reason, but let's see if we can see it like that. So 100K is the largest, and then we have a buckle in here from 94,800 to around 97,500, and that is pretty decent. If we were to break out on the daily from that trend line at around RSI 50-51 and we broke out to the upside from there, we could go for that liquidity. And although now we are on a Friday, I'm thinking, and I don't want to have another pump over the weekend that gets retraced all the way back down. So hopefully if we have a rally, we have it on Friday, and then if I was you, I would consider taking profits. But a data point towards a rally that is sustained is that everybody thinks that if we get a rally today, it's not going to be sustained. So maybe it's going to last a little bit longer than expected. So careful with that data point. It's not guaranteed, but I like to have that thinking that on Twitter, everybody's saying we're going down. General markets going down, yes, then I privilege that. But if general markets don't, then that rally that is short might last a little bit longer. Ask liquidity yesterday went to minus 18, and that was enough at 92.5 to push the price down. Now, how much bidding do we have? How many orders wanting to buy? That is bullish. That we don't have much. It's very shallow, very little alpha in the order book at the moment. People shorting with high leverage stop, we got out of the extreme fear. And a data point that we have that is bullish is the negative funding rates. That could push the price higher. Not by itself. Ideally, we want to pair the negative funding rates with some bidding beyond 0.15, 0.18, 0.20. We don't have it yet. That's unfortunate. And liquidation levels is also very shallow. 270, a bit more than yesterday. That was 100. This move down brought a lot of new shorts, and that is petrol that we can use to go up. So maybe that with the negative funding rates, and if we start seeing some bidding on hybrid capital later in the day, that could start making the price move up. And let's go back to the charts. And let's see the indexes. As I promised, these moves on stocks definitely matter. My indexes, they were at the top. Perfect. There you go. So first we have the dollar index breaking down with the head and shoulders. We called for this mid-end of January when we were looking at the second the right shoulder of the RSI, and we hit the target of RSI 42, and that was something that we need to track and we need to register as something positive for Bitcoin, but it can have a delay effect, and we need to confirm the move down. So we are still today at 103.8, 139. If we close this week like this, that is bullish for Bitcoin. If we break this support on the RSI and we end up closing the week with an RSI below 42, let's say 41 or 40, or even beyond that, that is really bullish for Bitcoin with a weak dollar. That should help. But that is conditioned to how the stocks are doing, okay? Because we don't want to just take it as bullish and we have also a crash in general markets, okay? Let's look at the VIX. The VIX, we call for a breakout around 9 of December in here, and we've been tracking this. It's been going sideways, then it formed a double bottom, and then it managed to break outside this range. So far, it's in the area that I don't like, okay? That's why if I take a long, it needs to be small size. And if this week we retrace all that on the way down and we remain below that trend line in here, or that resistance, if you want to call it, at around 20, that's extremely bullish for the short term. But if we close like it is now in this picture, it is calling for continuation of the expansion, and that is very, very, very risky a market crash, okay? Or at least a deeper correction to what we're experiencing now. So far, the correction on the Nasdaq looks like a typical one, those ones that we have every 2 months. But so far, it has done half of my target of the double bottom. But seeing it in here and comparing it with the recent ones, it looks like just the same. But if you look at the RSI, it is not. It is breaking down a channel that starts from 2022. So watch out for that, because that is coming together with an expansion of the VIX. Okay, so too many things happening at the same time, and the effect can be quite intense. If you look at the S&P, again, we have this potential setup that is calling not just for a breakdown of the yellow trend lines, as we did in 2022 when we were entering a bear market. We went to the white line, and in this current situation, we have two options: the mildly bearish, which is to fulfill the double top and just get to 5.3. If we go there, it's kind of a recipe for disaster, because if you go there, we're kind of calling to complete the full target of getting into the white line. And a move into the white line is, as you can see in here, that is bear market. So we don't want to do that. We want to dodge that thing. And I'm literally monitoring this every day, the general markets. That's how important it is in the background. It's not just noise, it's something that can really create, in the middle of 2025 on Bitcoin, a deeper correction. And not just 30, we could be talking about 40, 45% correction if general markets did something like that. If the S&P after that does a recovery thanks to quantitative easing, that could initiate quantitative easing. But at that point, we have such a deeper correction that you want to have some cash to take advantage of the recovery. And don't count on it. I am not very good at calling indexes the precise time. I admit that it's extremely difficult. So I'm not going to tell you I have a crystal ball and I know that this is going to crash. I'm just only saying keep an eye for it. Let me know if you appreciate this update in the morning. If you do, hit the like, write down a comment down below. I read them all. I might not put a longer video. I have tons of things to do. I'm very busy today. So I hope this video is gonna do for the rest of the day. Maybe in the evening I'm gonna be able to do a market update. I got a bunch of things going on the weekend, so it's gonna be a bit more quiet from my end. So hit the like 3 times, okay, 3 times in a row if you appreciate the effort, and I'll see you later. Take care. Bye bye.